All right, guys, welcome to the next lesson. So this one is actually being made because gold has just hit yet another all-time high. And with NASDAQ hitting an all-time high a couple of weeks ago, it seems like a good time to be making a video on how to actually go ahead and trade these all-time highs. So first of all, most important thing we need to consider when we're trading all-time highs is just remembering to stick to the strategy. Nothing changes. There's no immediate FOMO buys in order to chase price upwards. I know it's difficult when you see these runs pushing up aggressively towards the upside. What is this, like 700 pips? I know it's very difficult to not try and chase that, but at the end of the day, we need to remember probability is what is driving our strategy and nothing else. So that's just point number one. Now, point number two is, first of all, how do we do our analysis when we're at all-time high? Well, actually, this chart doesn't look too bad because you can obviously plot a range up like this. And we need to remember, obviously, that resistance can turn to support after it's been broken through. So right now, this would be a relatively good support level for us in order to get something like a break and retest like this. Now, realistically, what we need to do is we need to actually plot our levels out like this. But there is going to be some times where you cannot actually go ahead and do... Wait, one second. So realistically, there is going to be some times where you cannot do this because there's absolutely no range. Let me show you. I was just looking at the gold euro chart. Actually, it's not too bad. But let's just take a look at, I don't know, something like this. Let's just go back in time to when we had pretty much no structure like this. How would you analyze a chart like this? Well, realistically, first of all, you wouldn't really want to be trading it. But if you were desperate to trade it, the way that you'd go ahead and do it is very simply, you'd have to drop to the lower time frame. So right now, I just dropped to the 15-minute time frame. And essentially, what you would have to do is go ahead and drop to these time frames to look for your support. So you can see quite clearly here, we have a small range being made. If you drop to the 5-minute, you're probably going to see something a little bit better. Yeah, see, so you've got like small 5-minute levels, same thing here. And you can utilize that in order for trading breakouts. However, obviously, that does sort of lower the probability of these trades because we need to understand the higher time frame is still driving price action. Now, obviously, we're only looking for buys during this time. There's no point trying to pick the top of these all-time highs. It's absolutely ridiculous. But the main thing to do is actually, just try and wait until structure is formed. So again, patience is going to come into this a lot. We're going to be waiting until structure is formed exactly like this. So this move up was not very good, but now you can see we're breaking out of the range again after forming some consolidation. Now, one thing I do want to mention as well is when we're in aggressive pushes like this, even if it's not an all-time high, the number one thing you want to be thinking about is how can you actually take advantage with the highest probability trade. Now, a lot of people will say, obviously, don't buy this top here, wait for the pullback, and then take the continuation. Yes, this is valid. But also, a lot of people end up trying to catch the very bottom of the pullback, which inevitably ends up burning them, because what can happen is that pullback can be a lot bigger than you expect it to be. You could hit your stop loss, and then it runs without you, and that is one of the most annoying things ever. Trust me, it's happened to me a million times. So the best thing you can do is go ahead and actually wait for a confirmation that we've put that low in, and then obviously take the position upwards. So this is going to be stuff like the Sky Dweller model. It's going to be stuff like a breakout after this. You can see quite clearly, if you waited for that pullback here on yesterday's push up, followed by a bullish close, and then took a Sky Dweller upwards, same as here, you would have ended up actually making a good amount of money. Otherwise, like we said, you can just inevitably take that breakout after you close above that most recent high. Now, in terms of managing trades, this one's pretty simple. There's a lot of ways that you can manage trades during an all-time high. Now, it's very difficult if you are pushing up. For example, up here, you can see, there's absolutely nothing to go off of to the left. There's no, wicks to be used as a, break-even point, or there's no previous rejection areas to use as a take profit. So how do we actually go ahead and utilize that? Well, the main thing is we want to be actively managing the trade on the lower time frame. Let's imagine that we actually caught this position right here. Let's say actually we got like a wick entry here on this 30-minute, just for argument's sake, right? Well, obviously you would have had your normal stops, and your take profit realistically can be endless at an all-time high. You could target a previous wick high if there is one, but like I was just saying, there wasn't one here. So normally what I do when I'm trading all-time high is I don't really set a TP. I just sort of manage based off of a few things. If you are going to set a TP, what I would recommend is doing this right here and looking at psychological levels. So essentially, psychological levels are stuff that essentially humans are going off of in terms of placing their seller orders, buy orders. Imagine someone at a bank wants to place a sell order. If they're not using an algorithm, they'll probably just put it at a round number, you know? That's the theory behind psychological levels. And whether it's true or not, it's just a good thing to aim for in terms of a TP. So you're looking at multiples of 5, multiples of 10. So, you know, anything like 3620, 3615, 25, etc. The bigger ones are obviously multiples of 50 and 100, but we're not near any right now. But yeah, alternatively, and sort of as well as that, I would say the best thing you can possibly do is go ahead and actually manage based off of structure, based off of the candles themselves. So you want to be sort of trailing your stops during all-time highs. When you are seeing these pushes up, as you can see right here, this is a 5-minute candle. When you break all-time highs, a lot of the time the pushes are going to be extremely aggressive, followed by a very strong retracement. And then it will sort of, you know, load up, consolidate for a little bit and go even further. So when you are seeing like that sort of re-break, what you actually want to go ahead and do is go ahead and wait for something like this to be formed, some structure, and then we can begin to trail our stops, just like I've taught you before, you know, trail below this low, you know, first of all below this low, and then as it comes up and up and up, you can sort of manage that way, if that makes sense. As well as that, you could look on the 1 minute, but realistically 5 minutes should be fine in terms of that. And yeah, just make sure you protect your downside, you know, have a decent break-even point. A lot of the time you want to be trying to catch a wick entry up here, so you'd be trying to look for the flip or something like that. But other than that, realistically, there's nothing else you can really do differently. Just stick to the strategy, wait for a good entry model to print, wait for a decent pullback. One thing I would definitely recommend as well is using market structure highs and lows as areas for liquidity. So obviously we have no areas to the past in order to look at, you know, where did a wick need to tap into before we actually were able to get a position. So what you can do instead is go, okay, cool, you know, let's say we you know, break out above the high. All right, I need to see a bottom wick tapping into the next low, which it actually ended up doing here, you know, like quite clearly the 30-minute closed above, and then you ended up tapping into the next low, which was all the way down here before continuing back up, if that makes sense. So realistically, that's something you can do. If you're looking at, you know, where the hell can I get my wick levels from, it's going to be that most likely. Otherwise, yeah, wait for the higher time frame closures, wait for everything to be in your favor, and that's essentially it. How to trade all-time highs very quickly, very simply. Don't change anything and you'll be fine.